I think regarding the Antler, about the Antler and the program, is I believe we do have a session later on, right? Opportunity to explain more by Nazla. So I think I'll stop here to pass the mic to Audra.
So I'll follow your suit. Audra, I've been in Malaysia for the last 15 years in a startup ecosystem. Built 3 companies in media, e-commerce, and fintech. That's namely Says, Groupon, and Fave in this ecosystem. Worked with the ecosystem quite a bit, running accelerators back in the day in the early stage. And 2 years ago, Fave got acquired. So myself and the founder of Fave, Joel, we set up a fund. And now we are kind of putting our foot forward and investing in a pre-seed early stage companies. So it's our way of giving back. So very similar journey from founder to investor. So really can relate to all of you who are building stuff. And yeah, we'll share about investment thesis later. And then I think, more stories to follow.
Thank you. Hi, my name is Len. I'm with Gobi. I've been in Malaysia all my life.
15 years, huh?
Yes, 15 years. So Gobi is a pan-Asian venture capital firm. We've been investing for the past 22 years, over 380 companies across Asia. So China, Greater Bay Area, Hong Kong, Southeast Asia, and also South Asia as well. And so myself, I've been with Gobi for the past 6 years, looking at mainly covering Malaysia and Southeast Asia as well. So.
Okay, so you also share your investment thesis later, lah. Okay. Yep. So just FYI, after this session, you're interested to get autograph already. After this session, so we will have a very short showcase of the VC from First Move, Gobi, and Antler about what do they invest in, their investment thesis, their investment mandate, the amount of investment, and they would actually put in the startups and things like that. So that will help you guys to actually have an overall better idea on that whether does it suit to your current stage or anything, right? All right, let's move on. So fundraising 101 is all about getting to know how to go and fundraise, right? And so I assume most of you guys are startup founders, right? So there's always one of the burning questions that actually submitted by some participant is that where to find you guys, right? And how, the founders, right? It's like, where can I access, or even find you guys to actually pitch to you, or maybe even send a message or, hey, I want to chat with you about my startups. And I think most of the founders would have wanted to, who could have, need that advice or insights. Right? Where do I find you guys, right? Yeah.
Where do you usually spend your time, Audra?
Well, social. No, I'm joking. So I think, starting point for any founder, right? Define what kind of investor you're looking for. Because, each of us, we can share later what our priorities. And if let's say you're building something in agritech, agriculture business, there will be only a certain type of investors relevant to you, right? Like, for example, we invest only in consumer-based companies. So, if you're running B2B, it'll be less likely that, it will be interesting for us. So, number one, define who you need to talk to, because you'll waste so much time talking to all investors and getting rejections. And then two, if you meet one investor and if it's not their thesis what you're building, ask who else is investing in my space, right? Then we do refer deals to each other a lot. So that would be your best way to kind of get to the right doors to knock on. And obviously searching, going to events like this. I think Iterative recently released like a list of all Southeast Asian investors, like I think over 1,000 list of investors in the region or those that are investing in the region. So, you can get the resources. But I think starting point is just define who is best your investor. Is it angel? Is it a VC? If it is VC, then, what stage or sector that they are looking at. Anything to add on?
Yeah, I guess if the question is how to contact, right, to VCs, obviously, like our phone number is not public, right? But you can still search the VCs or people working at VC firms on LinkedIn, right? And can connect through the LinkedIn. But I guess like same for Lang and Audra, we are receiving a lot of emails or messages, right? And like as a human, sometimes we're swamped in the email or the messages, right? So sometimes the response might be slow, or if the company is not within our investment criteria or thesis, it may be even more slower or longer, right? So I guess like, this kind of offline events is also a good opportunity, right? Because once you sit, right, see each other together, right? And I mean, we can't really run away, right? So if you talk to us, right, you have to still talk to you, right? So I think this kind of offline events in Malaysia nowadays, I can see like more and more events are coming up. Or this week, actually, like we're very busy to attend a lot of events today. Myself, I have like 4 events, right? But again, like you can easily find where these events are happening, right? And can just, like attend and mingle, network with not only VCs, right? Also other entrepreneurs, right? I think that's a good opportunity, right?
I guess maybe something to add. So I think we try to be as reachable as we can. Yes. So cold calls like our LinkedIn or emails works, but sometimes, like Frank said, right, it would slip through the cracks. So I think one good way is this one built on what they said earlier is getting a warm referral as well. So I think that really helps you stand out amongst so like Frank, Audra, they meet like hundreds of startups on a daily basis. So I think a warm referral really helps help you stand out. So get someone that knows the industry well, knows us. Maybe there's a previous connection in the past. I think that really helps to help you stand out in front of the other startups.
Right, interesting. So, I mean, congratulations, you guys that made the first step to attend the offline event to network and one step ahead, right? So, Len had mentioned about LinkedIn, right? I assume most of us have LinkedIn, are quite active in there. So, probably one channel that you guys will probably will reach out to maybe angel investors or maybe VCs is LinkedIn. But somehow, cold message them or something is still maybe a struggle for you guys, right? So then coming back to you three, right? What would you think a nice way for those founders to actually reach out to you? Is there any like format, how would you like them to reach out to you on LinkedIn, right? In order for them to like, in order for you guys like, oh, that guy is interesting. Okay.
But if you say it now, everyone does that.
Well, I mean, yeah, it's a tip for them to reach out to more. All right. Anyone?
Yeah, so I mean, can try different strategies and all, but like, is it email? Is it a message? Is it referral? Just be short, straight to the point. Like, what are you working on? What stage are you at? What are you looking for? Right? Like 3 lines and everything else will follow. Because if you send a very long email, I don't read. Even LinkedIn messages, especially long LinkedIn message, don't read. Skim through. Okay. So short. Then you kind of know what to do. You say, hey, not right stage, not right industry. If it is interesting, we'll refer to someone. If it is not interesting, I would not say I would refer to someone, right? So I think brevity is super important because, as Frank say, like there's like tons of emails and messages and what's not coming in. So you kind of need to skim through fast.
So I think the recent something at least caught on my eye. I guess one entrepreneur from Argentina. So he said, "Hey, my name is someone from Argentina, right? I believe you'll receive a lot of like this kind of contact from founders. But by the way, the startups in my country are really cheap in valuation. Are you interested in, right? Well, I'm not sure. I don't think it's the best way to approach, but at least he caught an eye, right? And I'm just sharing, right?
You're looking for a bargain, huh?
Not really. As you know, Antler has a set terms, right? So don't bargain, but at least that caught my eyes. And another thing is a recent one. Someone sending me that, oh yeah, I'm doing halal hot pot business for finance. But I thought, okay, halal hot pot is interesting, but end up they're doing like some loan business for cross-border trading, right? But like, and try to have like some, I don't know, like interesting keywords, right? Which is not 100% related to it, but in the end, somehow there's reason, logic behind why you use those keywords, right? It's a con on your eyes, right? So I think those things are something that, and of course, a referral, right? If a company is referred by Audra, for example, I can't just ghost it easily, right? So yeah, I think that's referral is a very powerful tool to reach out to the VCs, right?
And maybe something to add is also alongside that, right? It can be like you can build your own brand as well, right? So just develop content, thought leadership, and just getting out there more often on the social network. I think one thing that I always try to emphasize with our founders as well is being persistent and also regularity as well. So if you are quoting certain investors, do like monthly newsletters, monthly updates. What milestones have you achieved? What challenges have you faced? And how do you manage to overcome it? I think just consistency like this, I think they will help you stand out as well. It's not easy, right? It requires a lot of commitment, but I think the payoff is rich as well at the end of the road. So.
Interesting. Okay, so let's say they have gone through, co-messaging you and things like that. But I'm sure each of you guys have a specific requirement or criteria in looking in that, right? Knowing Antler investing in very early stage, working with connecting founders to become a team. First Move investing in consumer brand. Gobi Partners sector agnostic, but still investing in seed to later stage, right? What sort of criteria that you look on a startup, right? That kind of like makes you wanted to meet them, right? It could be person, it could be anything, right? Maybe you have any stories that you can share, that would be great.
I think maybe I'll start first. So for Gobi, we are pretty active in Malaysia at the moment. So we have 3 funds that are actively looking for startups to invest in. So ranging from seed all the way to Series C, so which is early to growth stage. And then our check sizes ranges from 1 million ringgit, 250K US, all the way to 10 million US for the first check. So we are actively looking. But in terms, just to answer Jeff's question, right, in terms of criteria, of course, it depends. Different funds has the different mandates, early stage, growth stage. We are working with Khazanah, for example, in the Dana impact side of things. So there's the impact angle, nation building angle there. But
personally, what would you look at?
I think if it really depends, but I think if you really narrow it down, it boils down to 3 things. The market size, the business model, and you, the entrepreneur yourself. Yeah, I think that's
do some facial later.
Really it. Yeah.
So maybe we differ a bit from you because we're very early, same as Antler, very early. A lot of times there is nothing, just idea. Sometimes no deck built, just idea. So in that case, it's just people, right? So it's really like a HR job. Seeing the profile, seeing what your past experience is, and then if you reach out and say, hey, I have some business ideas in this space. If your background is interesting enough, I'll meet. Yeah. Second is if you already have idea and working on it, then it's a space that you're working in, right? So if the space is interesting enough, big enough, okay, let's have a chat and see how you're addressing the problem. And sometimes I would meet some people that I'm like, we might not be investing in this. Pretty clear, but it's very interesting what you're doing. You want to learn about it. You want to kind of have a understanding, and then potentially share with someone else as well. So in a nutshell, for me or our stage, it's your experience and the space that you're going to build in. Because the business model, if we like each other on the 2 levels as a experience, know-how, and industry, business model, we can build it together. That's not a problem.
Yeah, I guess Antler has like different funds, later stage fund go up to $10 million as well. We have some like later stage portfolios in Malaysia already. But I think in general, our forte is like day 0 investment, right? And we are providing like 10 weeks of a program, right? So even the founders who do not have an idea, right, can even join the program, 10 weeks program. And then throughout the program, you can actually cultivate or come up with ideas, right? And in the end, Antler likes that idea, that we invest, right? So I think from Antler's side, especially for the venture building studio, we really focus on founders, right? Founders, of course, track record. We look at like 3 areas: grit, right? Persistency, and like history, to a track record of founders, right? And we are willing to work as many founders or pre-founders or potential founders as possible, right? So if anyone is interested in building something, but you don't know where, how, or whom to start with, then you can probably look out for Antler program.
All right. So speaking on pitch deck, so I think again personal criteria, they look at one thing, but then most of the time they'll send you pitch deck. I know Audra for a fact that maybe they don't need a pitch deck, but so maybe for everyone here, most of the time they would have. Do you guys have pitch deck, right? Investment deck and things like that. So maybe we'd curious to know more from you guys in the pitch deck. What are the things that you look out for, right? And do you have a preferred format, or do you need to be too long or something like that? What are the one thing that you guys want to have them to include in the pitch deck, right?
So as an Antler is providing this master classes and information, we actually do have one dedicated master class about the pitch deck, right? So of course the pitch deck from like early stage, seed, Series A, B, C, later stage, pre-IPO, all different format, right? Different information data required. But of course, Antler, we are more focusing on the pre-seed, the very first pitch deck, right? And then I think there are like very clear sort of items that we recommend, or most of the VCs are expecting to see, right, for a pre-seed pitch decks. But just to give you also one tip, right? I guess this very early stage or pre-seed, or let's say the first pitch deck of, let's say Uber or like Google, Facebook, right? Airbnb. Did you guys know it's actually public? Yeah, you can find it. You can Google search first pitch deck from Airbnb, or I'm not sure of Tesla, but a lot of most of successful Amazon or whatever companies are public, so you can actually refer to it, right? But honestly, if you maybe some might have seen it already, but most of companies start from somewhere, right? And then when they start, they're not like Jeff Bezos of right now today, right? So you can see it's how I'd say rough it is, right? But again, I think at least they're following certain format or required informations in the beginning, right? So I think you can refer to those as an example or samples, right? But at the same time, for those required essential items you need to hit, I think those informations also you can easily find on Google, right?
Maybe just to add on, so obviously structure, simple Google search or even ChatGPT will provide you ideal structure, not an issue, 10 points to hit it. I think what is maybe overlooked, especially the early stage startups, is that team slide is the last one. But actually what you hear here is that people are the most important at the early stage to kind of evaluate. So bring your team, your experience, your co-founding team slide up for early stages. Later stage, obviously, your business, your metrics, your performance will speak on behalf of you already. But if you have zero traction or very little traction, you are the one who is selling yourself and your business. Yeah? So bring that up.
I think from maybe, because for them, the perspective is a bit different, right? More early stage, pre-seed onwards. So maybe on the more photos that have startups that are more established, I think we would appreciate, apart from just the basic things, right? What problem are you solving? How are you solving it? And what traction have you managed to successfully build since you've started? I think what can be more, I think we just need to expand it a bit further, be more detailed in each and every revenue stream, help the investor visualize how you guys are what's the path to growth for you guys, and path to profitability, path to growth. I think that will be very important as well. Maybe to share just a small pet peeve, because we review a lot of decks, right? And this is something that I've been trained by my boss as well. So when we see typos in the deck, I think that that kind of comes across as not that professional, right? So I think maybe have someone proofread the deck before you share it across to an investor, because first impression matters, right? So whenever you see a wrong spelling, I think it hurts. Yeah, it hurts quite a bit. So small thing, but yeah. Mentally, we are deducting points already. So yeah,
it's kind of like dating a girl, right? Dating a guy or a girl, right? It's typo, say wrong name, or kena deduct point. Interesting. Yeah, I think that is something that is, I think, valuable for you guys. Pitch deck, typos, on those kind of pet peeve kind of thing, right? It's very important. But
it's so easy nowadays. It's autocorrection, right? So you see like red line, then not even ChatGPT, just PPT or at Google Doc, they already do it for you. You just do not pay attention to just double click.
So yeah, attention to details, guys. Attention to details, right? Because this is like the first impression. Either it lasts or it don't at all, right? So all right, let's move on to the next one, right? So after pitch deck, everything is done. So I actually, if just I going through the process of, fundraising, how it start from, cold calling to, submit pitch deck and meeting and everything. So you guys will get a 101 journey on how it goes. So now that you guys, want to meet the guy, right? You want to meet the founders, right? So is there anything that you would like advise, when it comes to pitching their idea to you? Or do you guys have any like keywords, right? Like Frank had mentioned that you want them to actually say that out, or how you guys would like a pitch to be like, right?
Yeah, sure. Actually, this is also like really long topic, mass class, but I guess like there are different duration or version of pitch or pitch deck as well, right? I mean, personally, my previous company, I think I created like 100 different, multiple rounds, but 100 different pitch decks, ran different pitches. But, most of the time, like I'm speaking of like more early stage investor perspective, especially early stage pitch, it's short, right? You're not like going through like 100 decks, right? 100 pages, right, of deck and talking like 30 minutes of IR, right? Usually it's very short, concise, like 5 minutes, 7 minutes, right? And then few things, right? First thing, I tell the founders, if someone couldn't, like some founders, right, you can write a script, right? But when you pitch, right, like some people watching their phone and try to read, right, or print like paper, try to read. It could work if you go to like radio station and do some radio interview, right, because they don't see you, right? But when you pitch in front of investors, right, at least for like me, if someone is watching phone to read it, then I think that's really bad impression, right? And second thing, like try to get to the point straight, right? Like, yes, some founders try to start with like, of course, like resonate with their personal story. It's great, right? But it still needs to be concise and impactful. Or sometimes just better to just go directly to the problem solution, right? Instead of talking to your like story, my parents, my mom, my father, my grandfather, right? Like whatever. I mean, like, yeah, it's maybe interesting, right? But VCs, because we're listening to this pitch, like tens of pitches every day, right? And like it's sometimes unnecessary or lose attention, right? And third thing is, some founders sometimes during the pitch they start to ask Do you know this, by the way, right? Do you think how many cars in Malaysia, right? Well, well, it's you're not interviewing the VCs, right? So I think these kind of things, it could work for like maybe like school project, right? Or to more bigger like audiences, right? But for VCs, right, sometimes that I felt like this kind of pitch, especially like going through, we have to go through like quite intense, like many different pitches, right? Always concise, precise, simple, and go straight to the point. Would be at least, like to me at least, it's better. Right?
To add on, I think be aware of the context, when and who you're pitching to. If you're in front of the panel of investors, you have to be as structured, as sharp as possible. If you are on a video call, a different way to build that, engagement. If you're face-to-face meeting for a coffee, you can relax a little bit, right? So really the context matters, and who is your audience. Is it one-on-one? Is it one-to-many, like from the same investment committee? Or is it multiple investors? So for example, if today you stand up and pitch to us, be as short as possible, as sharp as possible. But if you are meeting for coffee, right, chat, and especially it's the first one, what I prefer, that's again maybe personal preference, is to talk a little bit about the space, about the problem that you're building, See if I can relate to it. See if I have understanding in it. Because if you come in with semiconductor pitch and I don't have background in semiconductor, I'm losing you, and I'm having more questions. So it's good to get into the space. Like if you're pitching me some pets business, I'm like, oh my God, I love dogs, and then we can connect and all that. But again, it's my personal preference, but set the context, see the understanding. Maybe don't ask questions, do you know this or did you know that? Because I feel like, oh shit, if I don't know, then
we don't invest and we don't know.
A lot of times we don't know everything because we speak to so many different industries, right? So it's impossible to know everything, but to get the understanding, and then go to the point, what I'm doing in that space. So that helps because by painting the picture of the problem of the industry that you are building in, then also builds your credibility in that. And then my follow-up question would be like, after you say, what are you building, what you're working on? I'll be like, what? But why? Why you? So then you can tell the grandmother story and what's on, right? If you have any. So I think setting context and then knowing how to shift your pitch, in different contexts is very important.
Building on the context thing, right? So there are different types of investors, and even here there are pre-seed and mostly seed, pre-seed, seed as well. And then for us, it's a bit more later stage. I think that's also something you need to tweak as well. You tweak your pitch based on that. So we have angel investors, there are VCs like us, there are corporate venture capital firms, there are impact investors if that's the space you are in. So tweak the pitch based on the investor appetite as well. What are they looking for? So that's one. And then I think so I think that's very important to make sure if, like for example, let's say you're raising Series A, for example, right? And then you are looking for a certain amount, and then if you're speaking to a VC that can lead, or if it's a VC that you can't lead, I think that you need to kind of strategize differently as well. So from our experience at least, it's very important to secure the lead. There will be a lot of investors that can say, oh, I'm interested to follow, subject to you finding a lead. So when it comes to that, then you want to really do your homework, right? So that's why we always encourage founders it's not a one-way thing, right? It's not just us doing due diligence on you. You should do due diligence on us as well before you reach out. Right, so identify those that can lead, has a track record of leading rounds, and then zoom in on them. Make sure that you get as much time as you can from them. Get their opinion, get their input in terms of your business, right? Then I think once you have that in place, then it'll be much easier to get the follow-on investors after that. So yeah, in summary, different investors have different appetites, so tweak your strategy on that. And then even between lead investor and follow-on investor, there's also something that also you need to take note as well. Yeah.
Right.
Add on a little bit. So one case, Vietnamese startup pitching to me, had a nice chat and follow-on chat, and they say, "Oh, by the way, Gobi is coming in on board." I'm like, "Oh, okay, sure, let's sign." We signed in the week. Yeah, same day, the Vietnamese. Yeah. So, if they're on board, we're like, sure, they did their job already. So having your, a lead investor, or when you, design your cap table, be smart about it, right? That's one. But maybe one also thing about the pitches and pitch decks as well. Don't bullshit your numbers. Oh, don't. Vanity metrics and all that. We see it through, maybe it looks good on the deck, but we can very quickly do the math, right? If you say your, annual revenue is this and this much of clients, we quickly calculate, so your average order value is this and that, but it doesn't make sense because your this and that doesn't make sense. So we are very quick on the math. And if we catch something where discrepancy is, and if you can't defend that, that's a red flag. So numbers, not accuracy in this, quite, at least that's my pet peeve. If someone cannot defend the numbers.
Well, so numbers, right? Yeah. No. It's really important point, right? Because yes, numbers speaks itself, right? It's a very powerful tool to convince VCs or attract the attention and interest, right? But at the same time, it's a double-sided sword, right? If you do not give clear numbers or why you come up with those, right? For example, especially this traction side, right? Let's say, we secure $1 million project for this, right? But yeah, that's project value, right? And then your cut commission is maybe 5%, 1%. Or it's $1 million projects as a total, right? But they deploy from maybe $100 starting from beginning, right? So of course, as a founder, sometimes it's very tempting, right? That you want to show whatever bigger final total number, right? But make sure, it's accurate enough, right? And do not try to give any sort of misunderstanding, right, to the investor. Once we, as a VC or investor, spot it out, I think you will lose a credibility immediately, right?
Right. Expanding on the topic on numbers, right? Because you guys started it, so I just follow up on that. So got two parts, right? One you mentioned traction, another one is actually market size, right? So I mean, you have seen a lot of pitch decks that show incredible, interesting market size, huge market size, but somehow when you scope it down to TAMs, it is some addressable market, it kind of still a little bit ridiculous, I would say, right? What's your take on that? How would you advise them to maybe structure a better market size? Probably, yeah. Or you have any interesting story about markets? $1 trillion.
There are two approaches, right? Top down and bottom up, right? And usually, if you follow right, reasonable logic, right, then even though you're top down or bottom up, in the end, the number should be in a similar range, right? As long as you have you're backed by strong logic, right? Strong facts and numbers, right? But most of the time, founders, I can really resonate the pain point there, right? Because it's very, very difficult to come up with addressable market size, right? What is really addressable market size? TAM, SAM, SOM. What's SOM, especially to the startup, right? But my advice here is be realistic, right? It's what you're doing. Try to be realistic, right? It's in the end, you will face it. It's reality, right? If you do the market research, right, and then you found out that market size is too small, right? Instead of exaggerate it, try to find how to tackle or tap into another bigger market size, right? Unless you'll go to the rabbit hole, right? I've seen many times, especially early stage founders during even the program, right? They stick to this one like problem. So yes, there's a very clear problem, right? And this problem is a solution for that, right? But markets, it's so small, right? Then they try to, okay, in that case, maybe we can expand it to Indonesia, we can expand it to like even like the US, right? Everywhere in the world, right? It's a strategy. It could be a strategy, right? I mean, relatively, I would just say instead of like hitting like bigger market in Malaysia and can compete directly with the big like incumbents or conglomerates, maybe you go to super niche and then target bigger market might make sense, right? But if this logical process is okay, but if you are niche and specific in Malaysia, but you just want, in order for you to get a bigger market size, just try to expand it to the other country, then you're like going to the rabbit hole, right? A lot of a case or a lot of examples or challenges I've gone through. But to be honest, as an entrepreneur previously, I really can feel it's a pain. It's very difficult. Even though we do have the masterclass for it, right? It's actually quite controversy, right? How to come up with the addressable market size. Maybe you have a better idea.
No, so it's a tough exercise. Everyone wants to have it, and everyone should have it because it really gives you a perspective, right? So number one, from digging into industry, understanding what's happening and what's on. So I agree, top-down, bottoms-up approaches, whichever you choose is fine. It's more about what kind of conversation you have around that, right? And combined to that, complementing to that, conversation about your competitors as well, right? Who is working already in a space, and also like maybe speaking from the consumer perspective, right? You can have the addressable market saying this is the size of the problem, but then are currently people spending on it or not? If there's a solution that's maybe free, and you're going to charge for it. There's no habit of spending. So that's a complete different story because you need to educate market from scratch to spend in that. So while there is opportunity, then, is it really easy to address that? Is it, just like that, turning and saying, I'm going to convert from competitors or I'm going to educate the market and so on. So there's just so many intricacies in that space, but it's a good exercise to have for yourself. And also, in a pitch, when it's there, that slide, I'm taking with a pinch of salt because there's no absolute truth to any of that data, and it depends how you slice it. So for me, if it is something doesn't really make sense, maybe I will have a conversation around that. Or if the space I'm not really familiar, then I'll be maybe doing a bit of my own research in that. So I don't know. Any more nuggets from your side?
I think that's pretty it. So it's really just more than the numbers, right? The numbers is really secondary. I think the thought process is what matters more. How do you come up with this? How do you slice and dice it this way, right? I think that's what matters more for VCs. Because with numbers, we looked at it, like I said, right? Pinch of salt, we cut it by half or whatnot, right? So it's, we've really making a mental calculation on our own anyway. So it's really just, thought process, how you come up with it. Like Audra said, are you capturing market share from existing players or you're creating new market share? I think those are the conversations that we should be having. Yeah, I think the slide is just the beginning only.
To add on, so like, to market size, to gauge the market size, sometimes you refer to like the other companies, right? Like in the similar sector, right? Oh, this company in the US, they're unicorn, right? They're making like $100 million, right? And then I think that's why it's a proven business model, and then want to bring it to the Southeast Asia or in Malaysia, right? But like, come on, guys, US, like if it's $100 million in US, right? Then coming to Asia and Malaysia, right? As a market size, I'm talking about market size. What would be the realistic number here, opportunity here, right? If you're just looking into, a clear way to exit, right? Once this American unicorn then come to buy out like this local company, like a Groupon. But yes, that's a clear way to exit, right? But whether you can really build a unicorn in like Malaysia, based, like I'm not talking about a based in Malaysia, right? Malaysia target company, right? There are amazing companies in Malaysia, based in Malaysia, targeting global market, right? But where their copycat business model from the US or bigger market, proven track record, they're unicorn, the one unicorn in that sector, and then want to bring it to the Malaysia to replicate it here, then I think that's not really logical or convincing for VCs.
Right, interesting. So another number question again. So market size, tractions, it's all now boils down to showcasing the valuation of the company, right? So there is some entrepreneurs or founders that base their valuation based on market size. There is some based on the number of traction. There is some just don't know how they come up with a valuation. So, and how would you think they could evaluate better, right, in terms of the company? Maybe on the maybe on a later stage or in a pre-seed to seed round, right?
Yeah. I think the lower the better, of course. Jokes aside, what we do is just
you're shocked.
Yes, we are. Jokes aside, for us, for later stage, right, because we can do Series B, C, even pre-IPO as well. So when it comes to that, naturally numbers matter a lot more. So what we do usually is we will compare it with existing benchmarks, right? Are they publicly listed companies out there? How are they trading in terms of price to sales, price to earnings, if there's that, or even transactions that have happened in this same industry, right? We try to be as apple to apple as possible. But if I take off my VC hat and maybe I'm just advising you as a friend or a colleague, if it's an early stage startup, you don't necessarily have to value a company right away. So you can actually kick that can down the road through there are various instruments these days, right? Convertible notes, safe notes that YC has kind of popularized. So you don't have to, this is one fewer thing to discuss, right? When it comes to negotiating with the investors, just get it done. This investment, we talk about the valuation later. You give them a discount, right? Because they deserve it. They took more risk than the later investors. Give them a discount, give them an interest if it's a loan. But otherwise, you don't have to talk about it right away for an early stage company. Anything to that?
I think for us, we kind of have our guidelines at what's our appetite, at what kind of stage of evaluation to invest. And again, maybe my personal advice, usually when I speak to different founders and, the ask is a different level of valuation, my personal advice saying your first round or even second round, don't overprice it, especially if your traction is very, very small. Because the moment you overprice it, you get some investors, usually angels, they don't care, they don't understand much of valuations. They put the money because they believe in you, right? And then you're stuck at high valuation, low traction, wanting to get Gobi on board, and they'll be like, hey, this is too expensive already. So then do you go down round? Because then your current investors will not be happy. So my personal advice also as a friend go saying, don't haggle for evaluation for your pre-seed seed much. Go fair. But in the next round, when you have already solid traction, then your negotiation power is to grow that, because you prove that you take the money, you're able to grow the value of the company and the transactions. So I think that's the kind of maybe logic to apply when it comes to valuations. Because else you will be stuck. And I, spoken to a number of founders who fundraised first round at really high valuation, and they are stuck. So then you kind of, shoot yourself in the leg.
Yeah, I guess like pre-seed or early stage investor like us, we do like save most of the time nowadays, 500 as well. So like we do not set the valuation in the beginning, right? So I don't have calculate so much about it. But I think more on, like entrepreneur advice, I guess I also personally experienced it, right? As an entrepreneur, you have a vision, right? You have ambition, right? You want to get a better, higher valuation, right? But two things you need to consider here, right? One, your next round, subsequent round, right? Once you have like really high valuation, right? You wouldn't, of course, you have confident at the moment you got the money into your bank, right? Millions of dollars, right? You're very, very happy, right? Confident, right? Oh, I can make it, right? With this money, right? But you wouldn't know what will happen, right? And then maybe it's not because of you, it's a market, right? Last 2 years also is really cold feet, right? So because of these kind of force majeure factors, maybe, very difficult to raise subsequent round, but already your valuation is really high, then you need to fight with your existing shareholders, right? Sitting on the cap table. Like in the end, like founders get more dilution, right? Very kind of ugly things kicking in, right? That's one thing. The second thing is usually the valuation and let's say the reputation of VCs or investors. It's kind of, you see the correlation there, right? So for example, like Sequoia, right? They most of the time they actually ask quite cheap valuation, right? But like we also need to consider how do you structure your cap table, right? Like Audra said, as Gobi is in the cap table, then or Gobi is investing, then we are very comfortable to come in, right? But whereby if you got one family office, right, never heard about like some, I don't know, like oil tycoon, right, family office, right, putting a lot of money, but got the $100 million valuation, right? Then I think institutional investor, it's very hard to justify that investment or even valuation itself, right? So they need to think about, balance it out, right? Who you got the money from, right? And then also a subsequent round.
Right. So yeah, I mean, as an entrepreneur, I mentioned one thing, right? Very ambitious, very visionary, and sometimes also quite kind of pain in the ass where you're trying to grill them, right? That's what you do, right? On almost on a daily basis, right? Well, just maybe wanted to know if you guys have any story about those founders are trying to defend their ideas so much, or any fun, any interesting conversation that you have with that kind of founders where they're trying to defend, the market size, I believe in that, but I believe in $1, $2 million, $10 million valuation. I'm sure there is some that came across. You guys have came across that. And quite sensitive, okay. It's okay if you're shy. If it doesn't, it's fine, right?
So approach I usually take, or I would like to have, is not us, them, but sitting at the table. If I'm already seeing potential in you as a founder to invest, I want to think about us as a team. Because if I'm your shareholder, I want you to succeed, right? And in that equation, conversations, understanding is very important. So if someone is not listening to feedback or defending questions, that's going to be very hard to build a trust and relationship, So yeah, for me, orange flag is whenever a founder is very defensive or not listening to the feedback, because we've seen we might have spoken to maybe 10 founders building in the same space, so we have different perspectives already. And if founder is very defensive, you'll be like, hey, if you're not listening now, if we invest and we offer a certain partnerships, collaborations, open the door, that's not going to be taken into consideration or listened. So I think that's super important. Ability to kind of be at the same table and discuss not as them, but as a team together. So I think that's starting point for me even before investing. And same goes after investments. If someone's very defensive, then I'll be like, I'll grill more. That's going to be fun. So then, but that is just for fun, Sometimes you get that vibe on a call or in the meeting. Someone's like, I know the best. I'm going to be the best. I'm like, oh, really? Let's have some fun.
It's a marriage, right? In the end. So
it's a marriage.
For us, our average holding period for every investment is at least 5 years. We've invested in Custom in 2016 and we're still holding it, right? So that's kind of length that we are talking about in terms of holding period. So like Audra said, it's a long-term partnership. We want to have that trust enable. You wouldn't want to date someone that you don't trust, right? So I think that applies here as well. Yeah.
All right. So moving on to, let's say you guys are okay with the founders, pitch that was fine, business model was great. Then the next crucial part is, of course, due diligence, right? So I'm sure most of you guys here heard about that terms, and I think in average timeline for due diligence about 6 to 9 months, right? For I don't know, right? What's the timeline for due diligence? And with VCs, we invested with different stages here, with pre-seed and seed, right? Of course, you guys are faster, right? But in more to later stage, of course, it's a little bit longer, right? It just maybe would like to have your opinion, right? What they should prepare for due diligence, and what are the things that you guys are really particular about, right? In terms of that kind of things, yeah.
Understand. So for us, if you talk about later stage, right, Series A, Series B and above, there will be on our side, on the VC side, we will do our own commercial DD. So it's not too different from with Audra or Frank, where we kind of understand the market size, understand the business, speak to competitors, understand where your positioning is. And then if we do like you, then we will do our formalities. We'll table it to our investment committee. And then usually after that, once we get that approved, then there will be the more thorough due diligence. What I mean by that, right? So there are a few things. We will get lawyers in to vet through your documents, constitutional documents, agreements to see that you are legitimate as what you are representing at the beginning. For even later stage, sometimes you will even have audit firms come in, vet through your numbers, your console accounts for the past 2 years, year-to-date numbers, your projections to it as well. Your tax, are you paying your tax if there's anything in that part, right? Some VCs I've heard of, they also do like tech DD as well, right? They get in software houses to come and vet your source codes and whatever. So yeah, so those would be done concurrently. We will also, for our side, if we lead the deal, we will also concurrently start drafting agreements. So there is the shareholders agreement, there's the subscription agreement for us to invest in the company. So in an ideal situation, it would take about 4-6 weeks for this whole due diligence, where we secure the vendors and then they come in and start doing the job, vetting through. But that's contingent upon, like what you just said, right? The documents need to be ready before they can start, before that 4 to 6 weeks can start, right? So it's an ongoing process. I think it only gets more thorough as you go from seed to Series A to Series B. I notice someone's laughing already, but it's really that case, right? So I think what we try to do even for our early stage companies is to get you guys prepared with just having a data room ready, right? Like a Google Drive. It can be as simple as a Google Drive. Just dumping all these documents, arrange it in an orderly manner so that whenever you have this kind of investors, you can immediately start this process, right? But it's a process. It takes a while. You will meet stumbling blocks. There'll always be delays, lah. I think you can't expect it to be very perfect. But that's, in a nutshell, yeah, that's really the expectation.
So how about pre-seed and seed stage?
So I think we stop at the commercial side, yeah, the legal and all that, audits, because a lot of times there's nothing to do yet. So personally for us, what we do founder background check, especially if founder founded something before. We would speak with the previous investors, and actually we had one case where we were, ready to go forward with investment, but based on the background check of the founder, of the previous investors, we actually pulled it back. So don't burn your bridges, yeah. Don't shove anything under the carpet, because market is small and then people talk. So I think that's just keep everything clean, transparent, or come up front if there is something that maybe some failures and what's so not. But it's how you present it, how you talk about it instead of hiding. So probably that's key. So that's from founder background and commercial. But other than that, there's rarely to check much beyond that at the super early stage. For certain companies, we would do tech due diligence. It's more of getting the advisor, maybe not the software house full on fledged, but tech advisor, just to have a look at especially all the AI built startups. Is it just a wrapper or real stuff? So just to kind of understand the backbone of technology is important as well, if that's IP.
Well, from Antler, because we run the program 10 weeks, right? And end of the program, we do IC. So if team passed IC, then same day or next day we sign the contract, and in 1 to 2 days, depends on you incorporate the company, because some founders, they do not even have a company at that point, right? So once you have incorporate company, open the bank account, then same day just transfer the money, right? So I think that's like a bit different approach that we're having, right?
Yep. Interesting. All right, post-investment, right? What would be the support that you guys provide to your fellow founders? From Antler, First Move.
Antler is like not just VC. It's a VC, but we also provide this 10 weeks of program, right? So actually, like we have very close relationship with the founders because we are with the founder most of the time from the genesis of the beginning, the birth, right? So and then we have like dedicated coach throughout the 10 weeks and then moving forward, right? So 10 weeks of Antler program, there's a post 3 months of program and a demo day, right? And then we have like a later stage fund, right? So we go actually pro rata, right? Follow on until like Series B, right? And like if it's exit or IPO, then we also do that, right? So we have very close relationship, especially with coach, right? So as an early stage investor, we do not take any board seat, right? But like because of that relationship with the founders, right? As a coach or mentor, right? We do have like actually a lot of informations from the founders and having this relationship, right? So I think that's like thesis or principle of Antler as well, because entrepreneurship is a really hard journey, right? And then the investor, can back you like first time, right? But let's say, like same person always be with you, right? Understand you from the beginning very well, yourself, team, business, right? And all the history for what you've gone through. And then you like support you second round, third round until the end. I think that means a lot to you, right? So I always tell the people coming to Antler, if I had Antler before my time, then my entrepreneurship journey will be less lonely, right? But I think that's like how Antler is supporting throughout this dedicated coach or mentor, right? Subsequent funding, connections, right? Even the business, right? If the founder wants or needs, right? Then we are support, almost like founding partner.
For us, same stage, different approach. We don't run programs. Our support is when and if needed. And it's around 3 areas. One is, if it is super early, helping to found a co-founding or leadership team. So building your team because, solo or alone, like you're not going to run too far. 2 is around your go-to-market. So it's your product strategy, sales strategy, growth, partnerships. Like, we sit and go through roadmaps of product development or make introductions for partnerships, whatever is relevant to the business. And number 3 is the next round fundraising. So for example, Kopiku is one of our investments, which is a conventional coffee business, making it affordable and accessible. 5 ringgit for Americano. Good, right?
Promoting.
Yeah. I love it. So we invested very early on. We knew the founder. He was talking about this for like 1.5 years, saying I would like to start it, and we're like, okay, sure. Let's write the check, go on, do it. And we actually scouted and interviewed together a co-founder and jammed on the branding and what so not, and introduced to investors, which actually now closing the seed round. And that it's in a span of investment was done in June. They launched the brand in September. So it's like 4 or 5 months of operations, right? So it's quite fast. And again, like we're not on board. We're not part of executive team, but supporting, meeting up once in a month or what so not based on needs, and where also our capabilities are.
I think for us, it's a bit different. So for us, I know.
Side check.
Are they raising Series A soon? Okay, so for us, it's a bit different. So for us, I think startups come to us for a few things. Number one is in Malaysia, we do have funds that we can double down. So let's say we invest in you in the seed round or pre-A round, you'll be rest assured that we have funds to support you when you are raising your Series A, your Series B, your Series C. And I think I've not been a founder before, but I imagine that gives a lot of comfort knowing that your existing investors are not just are they willing to support, they want to support you and they can support you as well, right? That's number one. Number 2 is similar to what Audra said. So we are VCs, right? So we know what VCs like, we know what other VCs like, what they're looking for, so we can help in terms of the investment advisory side of things. We can help share our insights with potential investors, recommend, introduce you guys to them, and then hopefully that will be where your next lead investor will come from as well. So that is one, going down to the details as well, making sure now that we're on the same side, making sure that you are not getting blindsided by some of the terms that the new investor is giving, helping you structure. Even during COVID, we've helped our companies that are in distress, for example, help them bridge funding, help them tide through those tough times as well. So these are some of the things we also do on the investment side. Otherwise, I think we are in the same boat, right? So we try to help wherever we can. We usually take a board seat when we lead deals. So we kind of give advice on how we view the business, how we view the industry, sharing our perspective. We also help in terms of strategy, business development. I think that's another thing that we are kind of strong at. We have 16 locations, 16 offices across Asia. So helping you open doors when you're expanding to a new market, I think that's something that some of our portfolio companies find quite helpful as well. That's about it.
All right. I think I have one very, very last question here. You're distracting me. All right. So when it comes to raising fund, right, it's almost a mixed opinion from a founder. Like, oh, should I raise it, or should I give up my equity, or what? But some are just like, oh, I got an idea. I got I don't know, raise funding, right? They straight away think of raising funding. So I mean, on your perspective, right, should a founder raise funding, right, or when do you think that is the right time to raise?
The reason, I think it's not a hard yes or hard no. I think it really depends. I know this is a lousy answer, but it really depends on the business that you're building and then the vision that that you're seeing with this company. If it's a brick and mortar company, it's a traditional SME company, then you might not want that kind of stress. Let's face it, it's a very stressful process. Imagine, you are a CEO and then you have to make up a significant amount of time from your day to day to focus on, to talk to investors, trying to pitch to them, and then neglecting operations and process, it's very tiring, distress as well. So, I think that's something you need to think thoroughly before even starting, right? Is this the path you want to take? Because we are hawks, let's just put it that way. And then, are you sure you want to sign with the devil? I think that's something you need to really think through before meeting anyone. Yeah, meeting us. Yeah.
It says, I know it's a recording, right? So can I say? That's fine. I don't care. But yeah, from after record. I guess I can be more direct, right? If you don't need money, then don't raise money, right? For sure, right? I have a huge respect on the entrepreneur who bootstrap, right, and then still build profitable, big, sizable, and amazing businesses, right? A lot of entrepreneur in Malaysia, a bit more on traditional sector, right? Do it too, right? So think about it whether, in the end, right? Okay, I'll talk to you more like entrepreneur terms, right? In the end, you really build unicorn, right? Unicorn is $1 billion company, right? And if you can build it by yourself, right, then you make $1 billion, right? And you give out the shares, right? That you dilute, right? You're sharing the pie with others, right? If you need the money to build a business or you cannot sustain, you have certain death value to, overcome, right? Certain the period that you need to burn the cash to build a sizable business, right? Then you need the money, right? But if you don't need, right, then shouldn't, right? Because to be honest, for me, I also have a couple of business before. One business I just bootstrap, right? Even I got money and then return it to the investor. That's the sweetest journey to me. The other company raised money from many different VCs. In the end, it's not that nice, right?
Think of that. No money is free, So then, if you need money to fundraise, think about what is the most acceptable term for you? Is it equity, which is now doesn't cost you anything, but eventually it will cost a lot? Or you want to take a working loan, convertible note, which is just interest, and which is, you maybe start paying from the certain period of time, but if you're already making money, maybe that's better option as well, right? So there are different ways to fund business, and different businesses need different funding. But I totally agree that if you don't need to, don't fundraise unless that comes. Sometimes you can bootstrap yourself, putting in some money, and you might not need investor for cash right away, but you might need that because of strategic direction you're going to go forward. Maybe opening the doors, partnerships, or having that someone behind you will open up doors for next rounds of investments. So a lot of times in the early stage investments, we work with senior founders who worked on different businesses before, so they have the starting capital. They don't really need your extra few $100K, but we work together because by having an institutional VC from very early days, and if you have ambitious journey ahead, much easier to fundraise later because someone already believed you and betted you and so on and so on. But if you're just starting off and you come and pitch us saying, I need money to build an app, I'll be like, why don't you build an app first? Let us know how it's going. And then, we kind of, so yeah, it's definitely what you need money for. And ideally it's the stage where you already, know how it's going to go, how it's going to grow. But every business is unique and different. So I think it's for you to decide what journey is the best.
Got it. All right. That wraps up the fundraising 101 session from the amazing guests speakers. So a little bit of time constraint here. I will now go to Q&A session, but we only have time for 2 questions. So if you guys have any questions, hi. That's fast. Good. We have 2 questions here. So if you want to, you can talk to them maybe a bit later. Yeah.
Thank you. Basically, I have 3 questions, but maybe I'll just ask the first one question, right? All right. So, what is your expected exit from a startup or a company? What is your expected exit? Maybe X times or any other exit that you are looking for?
Okay. But every fund is different. But I'll just we should make it short, right?
Yeah, we'll make it short.
So usually like a VC, right? Expecting 3 to 5x MOIC, right? Multiple on investment capital, right? In order to do that, it's going to be very long, but
well, we reserve it for later.
Right.
Yeah, because I don't think you can shorten that thing.
Yeah, right. It's a very lengthy one, right?
Yeah.
We can chat later.
Yeah,
again,
yeah.
Right?
All right. Yes.
I thought that question will be something that everybody will be interested in. So I think it's good that that's shared.
Because time constraint is the thing.
No, I just make it very short, right? So, 90% of companies VC invested, they do not give any return, right? And maybe 9% of company probably recover the original investment amount. 1% makes up all the other profits, right? So, exit, right? We are as an investor open to opportunities, right? Depends on situation, right? If could be a secondary, right? Or it could be like you go until the IPO or just M&A, right, in the middle, right? But we, as at least early stage investor, we fully trust and support the founder's decision, right? But if every single exit opportunity, we encourage, right, to take it. Mm-hmm.
All right. One more? No? 5? 4? Okay, yes, let's have a quick one.
So I'll try and make it helpful for everyone then. From your own experience or working or looking at friends' startups, what are the most devilish terms you've seen that other people should avoid? Of course, before they get onto the same side as you all are.
No, I can tell you, right? I'm sure, first of all, none of these three firms here is doing these terms, right? But previously, just my personal experience, right? Refixing, right? So let's say your business plan, right? Oh, we're going to hit like $10 million this year, right? But if you hit 8 million, right, then your valuation at this point we are investing will discount, right? So investor will own more share. If you hit only 5 million, then investor will have more shares, right? Refixing, very predatory, shouldn't have. Second, personal guarantee, right? That's not like but I think previously, in like 5-6 years ago, there are some personal guarantee terms, right? And like I had also pretty long chat with CGC recently, but I think the reason why the Silicon Valley or these places where a lot of the startup, like the top talents are going to start up, because just coming out from these big firms or like high educational institute and then going to the startup world itself is already huge risk. Right, they take a huge risk already, right? But on top of that, like giving the personal guarantee, right? Even whatever like facilities, could be loan, venture debt, or investment, right? That's not fair, right? But in these like developed countries or Silicon Valley, right? There's no loan, right? No personal guarantee, right? Everyone is encouraging the founders to come to like entrepreneur or startup space, right? And then no one asking for the failure. They actually value the failure, right? So I think. Like personal guarantee, as I said, going back to that, if you see any personal guarantee in any kind of terms at this point of the time, I think you can always find the better terms, or who do not even give any ask for personal guarantee. At least three of us, we do not ask for personal guarantee, right? Yeah.
All right. So that's the end of Q&A sessions.